Hello and welcome to the day ahead. It is Wednesday, August the 31st. I'm Andrew Gagan. Well, US stocks have closed lower for a third straight session as a strengthening jobs market fuels fears of further monetary policy tightening. The S&P 500 index tumbling more than 5% since Friday, when Fed Chair Jerome Powell reaffirmed the bank's aggressive stance. Each of the 11 S&P 500 sectors finished lower, with energy down more than 3% as the price of oil tumbled on signs of slowing demand. The Dow and Nasdaq also falling around 1%. Rate-sensitive mega-cap growth and tech stocks slid, led by Microsoft and Apple. The S&P 500 and the Nasdaq have now both broken below their 50-day moving average. On the upside, Best Buy was one of the biggest gainers after it reported a smaller than expected drop in quarterly sales because of heavy discounting. The US jobs market continues to grow despite aggressive interest rate hikes. The Labor Department's JOLTS report shows there were 2 jobs for every unemployed person in July, with job openings increasing almost 200,000 to more than 11.2 million, much higher than forecast. Meanwhile, consumer confidence rebounded in July, ending 3 straight monthly declines, with inflation expectations for the next 12 months falling to 7%. And the US home price index increased 0.3% in June, taking the annual pace to 18%. As investors consider the Fed's next move in September, New York Fed Reserve President John Williams has said it will likely need to get its policy rate above 3.5%, as in is unlikely to cut interest rates at all next year, saying it will take a few years before the Fed will be able to get inflation back down to the 2% target. However, Atlanta Fed President Raphael Bostic indicated that forthcoming data could temper the central bank's moves, saying if they clearly show that inflation has begun slowing, that might give us reason to dial back. US Treasury yields continue to move higher. The 10-year is at 3.1%, while the 2-year is up to 3.46%. Major currencies were mostly weaker against the US dollar. The Aussie currently is 69 US cents. And in Europe, German inflation rose to its highest level in almost 50 years this month, increasing by 8.8% on the year. Well, the local share market is poised to open deeply in the red this morning. The ASX futures currently off more than 0.8%. The energy sector will be in focus, with oil prices plummeting, Brent crude falling 5.5% on signs of slowing global economic growth, while Iraq has indicated it could redirect more oil to Europe if required. Iron ore futures have fallen, while base metal prices have also tumbled, copper down more than 3.5%, and the gold futures price has fallen 0.8%. And the risk-off sentiment has seen Bitcoin fall back below 20,000 US dollars. That is your day ahead. We'll see you again tomorrow.